Good morning. It is Tuesday, April 2nd, and we, my friends, have ourselves what potentially looks like a decent down day in the market, at least so far in pre-market. We're going to see how that shakes out. I hope we get some clarity. Market just opened up. I'll pull up what we're going to look at in a second. In the first 15 minutes, I want to see what happens. But what I don't want to see is us just go right back up and then chop. You know what I mean? Like go up a little bit and then chop. That is what I don't want to see, because that's been the story. We gap up and then we go down and we chop. Gap down, go up, and then we chop. So if we go right back up today, we are in the same pattern we have been dealing with. However, I am looking at Apple. Why would I be looking at Apple? Because look at Apple, ladies and gents. We are looking at a big time breakdown potential setting up here on Apple's daily chart underneath the 168.50 level, which it is sitting pretty much right at as we speak right now. So those are I just drew two lines. That's a big area of interest for me, and I think that's a potential nice short to the downside if we close below on good volume with a weak candle. That is a big if. Big if. So we'll keep an eye on that. The other chart that I thought was interesting to the downside that showed some momentum is Adobe, because Adobe had this gap down off of earnings, and then it just consolidated in this little zone, and now it's trying to break down the lower end of that consolidation. Not super clean, but it's trying. So we're going to be watching that one today as well. I like those two looking. Those charts do look decent to me. So we'll see. What's going on, Hudson? It is, what do we have today? Today we didn't have much. We had, just kind of on the backs of yesterday, it seems like. We actually haven't had anything come out yet. We got stuff coming out at 10 a.m. Nothing crazy. Then there's some Fed speakers this afternoon. So that's what we have. Yesterday it was kind of this manufacturing, construction, and all that stuff that came out. That the 10-year seemed to react in a way where it went up, obviously. That was the story, and so this is kind of where my eyes are looking, right? The trend is nice to the upside, like we've been building higher lows, so you have that. And then we just took out these highs, which was like 4.35 or so on the 10-year, which was a spot that we rejected multiple times. And it was like, a couple weeks ago, I was like, looks like we're rejecting that again. We're headed back down, and now you want to see what happens here. We'll break below 4. And it built a higher low, and now it's breaking out within 2 days. Very, very strong move there. So this, at least to me, is going to probably put weakness and hold back the Russell and risk-on stocks. I got stopped out of my Russell trade, which not surprisingly. I got it on like Thursday as it broke out here. It had a nice little pop, and then I could have gotten out. I could have moved my stop to break even, to be honest. I could have, but I moved it a tiny bit. It was a minimal loss it really wasn't a big loss. And I'm still playing on the smaller size account because I think my 26K account is back. Switched brokers and all that stuff. I think it's good, but today I got the credentials back and everything looks to be good, so we'll see. But either way, right, gapping down. I played futures, so I got stopped out some point this morning where my stop was, which was underneath the breaking candle low, which was right here. So we're not that much lower than my stop, but I originally had my stop below here, so that would have also been about to get taken out. So it doesn't matter, whatever. It's the nature of the market we're in right now. It's just not a momentum market. It's a trending market, but not very consistent is the way to phrase it, I guess. XLE, you want strength, then go to the energy sector. That's been strong. Oil has been strong. Yeah, let's jump over to oil. Very strong, breaking out. Well, I'll see if it holds up, but it's been strong. It's does look decent. Silver's up pretty decently, up about 1%, almost 1%, over 1.5%. It was nearly 2%, I believe, at one point. That's impressive, but silver's putting pressure on the highs of its past year, the top of the range. And then gold is also up again today. Nice and steady gold. I mean, these are very interesting how they continue to push higher and higher and higher. But watching the strength there, those are beasts. Gold and silver are just absolute beasts. Bitcoin, check out Bitcoin's daily chart. Absolutely cracked down right there on that massive daily candle to the downside. This is the 4-hour chart. You had multiple rejections clean off the 71.5 level. Now you're falling off. This is definitely scaring some Bitcoin and crypto bulls, because I'm sure you're like, this is not what you want to see. I think a lot of people thought once we broke out of here, pushed up, we'd have a consolidation. We'd break that consolidation, go to new highs. Well, that didn't end up happening, right? We're rejecting hard right now. I think in part the 10 years playing a role with that. But yeah, that's the looks across the board right there. Now, the charts that I was looking at that I thought were most interesting were Apple and were Adobe. So let's jump back to these charts. I'm going to jump over to the daily charts on these guys. We're only 5 minutes into the day, right? So there's nothing to go crazy about. But if I look at this Apple chart and say, where are we? Now we're at support, right? But this is we're kind of teetering on the edge with the big downtrend of, weakness, putting pressure on these lows. We could have a decent breakdown at some point here. That's what I'm thinking about for Apple. Maybe that's a swing trade worthy type of play. We'll see. Adobe, not as weak. It's actually kind of bouncing off of the morning, off of the first 5 minutes. We'll see how that goes. But Apple's weaker. Let me jump over and check on other charts. Tesla got crushed. They had some news they reported this morning. I think, I forget, vehicles or deliveries, something like that. They had that news. They got nailed on that. It dropped from like 173 down to 162, and now it's at 164. Yeah, everything else is like, I don't know. I wouldn't really mess with that with right now. It's just too early to tell. Well, because Nvidia's down 2%, but here's Nvidia's daily chart. It's still just like in this general consolidation mess. I wouldn't really be interested in that. Here's Tesla's chart. This is pretty weak. You don't get me wrong, but it's a huge gap down off of news. I just don't really want to trade something that's that close to news. And also, this is just like a jumbled chart. Doesn't have anything for me to trade anyway. So there's that. Walmart's actually up on the day, believe it or not. Interesting. Netflix, let's check that. Still a very strong trend to the upside. Microsoft, same thing, still trending up. Where I did see weakness was mRNA. I'm not going to trade that. Meta, same thing, right? It's balancing at the same exact spot as yesterday, pretty much. Home Depot got cracked yesterday. Must have been news, I assume. But been very, very strong. Google was super strong. Now it's down today, but it's just like potentially going to put in an inside bar right there. So we'll see. Kind of waiting around on that. And phase, nothing crazy there. Caterpillar, it's still strong as hell. Amazon's still in the strong trend. This is the problem though, is that like you might get a day where it like, oh, we're looking weak, and then it's like, well, look at these charts. I'm not shorting any of these charts. There's no way in hell I'm doing that. The only ones I would be potentially looking to short would be Apple or Adobe, but those charts, even that, right, they need to be weak. And if they're going to bounce off these lows, then it's like, okay, well, they're not weak. So they're not even the weakest stocks of the day. Apple's only down 0.72, which is nothing that insane. So risk on stocks weaker for sure. ARK's down 4%, getting nailed. That's for sure. ARK, massive gap down. You jump over to some of these. This is where you're going to see a lot more weakness, a lot more. Let's jump into some of the risk-on stocks. Upstart, still inside this consolidation. I wouldn't mess with that. Unity Software, that is weak. That is weak, yes, but still, this is a spot. This is actually a very big spot on Unity Software. Like, that's a very big spot. I would not want to be long necessarily this thing if we break underneath 24.50. But we've seen it do that before, and it's had some massive bounces off of that, so we know what it could do. Just, this is sketchy. This is actually a stock I would consider a swing trade short, only if we were if the market doesn't go right back up, then yes. But this is looking like it could be on the verge of a bigger breakdown, but it's been here before and it's bounced, so it has to break below. Block, yeah, whatever, nothing crazy there. SoFi, just not really interested in that. No. Snap could be interesting on the downside. The problem is in the bigger picture, this is a zone of absolute screw. This is just a screw zone. So you want to trade that, you go ahead. I'm not really interested in that. On larger time frames, Shop, Roku, that is interesting. I actually have an alert there. That is actually quite interesting. It's still technically, it's a bigger picture chart, like kind of in this trend to the upside, so it's a little sketch, but if you look at what we've had lately, the past month or so, big move down. Earnings was involved there. Now you're just consolidating kind of your bear flag. If you break below 61, that does look like potentially the next leg. So that I have an alert for. We'll see if it hits today. That could be, worthy of a swing trade, taking a shot. I wouldn't be with the weakness in the S&P. It's not a bad idea. Rivian's weak as hell. That is also one that would be very, very, very valid to trade to the downside, in my opinion. But it's down 6% already, so just be careful. Roblox underneath 35, 85 could be interesting, but it's kind of in this. Well, yeah, that could be good. That could be good. Yeah. Now, volume profile wise, yeah, this could be good. This is your zone to fill through. Like your targets on Roblox will be down towards like the lower 30s, like 32. This would be the spot to be looking for the short side. Palantir, yeah, it could easily come down a lot, but I don't know. It's been strong. I'm just going to leave that alone. GameStop, that's funny. New lows yesterday. DraftKings looked good. Now it's come back. Wouldn't short it, but I also wouldn't long it here at this point. Coin, no. Yeah, so I mean, it's really Roku, Rivian could be decent, I would say. You're getting weakness now on further weakness a little bit on the S&P and Apple and stuff. So yeah, Apple's under 160, or it's around 168.50. That's the spot we're watching. It's definitely the spot. My thought on this would be, unless I could see it, let's see if I jump over like a 4-hour chart. Unless I see it, yeah, I mean, I missed that though. You would have missed that. If you played the 4-hour, if I was trading on the 4-hour, I would have missed, or I would have had to get in, well, at the open, which I'm not going to do. So, yeah, no, that's not going to happen. It's not really tradable. But on a bigger time frame, my view would be stops at like just north of 170. So stops like kind of right up here, and then entries now here on the short side on Apple. Yeah, this could be good. So what's the math on like a rough risk reward calculator? If you get in at 168.40-ish and your stop is just over the highs of this pre-market, I guess, or this wick here at like 170.32. For a 2-to-1, you're just for a rough guide. For a 2-to-1, you're looking at 164.50. So like 165 being a pretty good target to have in mind as like a general idea, which would be like about a 1.75 to 1 risk score, which is not bad. 165. Let's jump to the daily chart and see how that looks. That's still a lot. Like that's a decent move. Don't get me wrong, but if we are going to get momentum here on the downside and we're gonna go like that. That's very doable. That's also right into this volume node here, which makes sense. It's a spot that I would say would be a decent target to have. So that's tradable, I think. And I may take advantage of that. Yeah. So there's that. And then there's Adobe. Let's go back to Adobe. Yeah, it's still weak there. You can play both. Those are very valid. Even Rivian we were saying before too. So I like Apple though, to be honest, because that chart just looks cleaner. This looks cleaner, and it's been weak for a while. It's been weak for a while. I like that one. Yeah. Let me see if I can pull up the account that allows me to trade. The prop account that allows me to trade stocks. If I can get it up, I'm going to check it out. Let's see if we can get in there. Give me 1 second. Once we're in, we could be looking at app. I think that's the most interesting one. And my next piece, I like it. It's looking good here. Here, let's see. This is a 10K account from a new prop firm, fairly new one actually, that I'm checking out. So if I pull up Apple's chart, this is on DX trade through 8cap. If I go to Apple, yeah, that chart does not seem right. Either way, I'm not going to go off their charts. I'm going to go off my charts. So it's a 4-hour. Let's go to a daily. That daily looks right. So getting it. I mean, you can play it tight. Like the other idea that I have too, and this is if honestly, this is how you should do it. I'm gonna look at volume here and just check that just to confirm. Because if we've got high volume so far, the first 15 minutes of the day, that's a good sign. This is going to break. This is weak, and we're breaking down. So my thought was, this 170 area, but honestly, why? Just play it over today's high. So the high of this morning, I wouldn't, if we break back above 169.50, get the hell, there's no reason to be in this thing, right? Is my view. Now, as I'm speaking, it's trying to bounce a little bit. So let's check the volume. I'm going to go to the 15-minute charts first. It's generally a decent sign. We've still yet to have a 15-minute close. So let's wait for the 15-minute close. That just closed. There it is. Volume came in today. It's not that insane. 539K that I'm seeing here. Yesterday was 496K. The day before that, first 15 minutes had 600, so we were actually below that. And higher than the day before that. The day before that was 550. So it's high-ish, but not incredible. And as I'm speaking, look at this. That bounced. I'm not touching that now. But yeah, that's why I like to wait at least 15 minutes, because you get that first 15 minutes, it allows you to determine volume and get a good gauge. The first 5 minutes, you can't tell. 10 minutes, okay, a little better. 15 minutes, okay, cool. 30 minutes, the more time goes on, the better, obviously. But 15 is a good amount of time. I feel like that opening volatility is kind of subsiding and you're getting a better view. Now, check out the 5 minute of this. So that is not good if you were trying to short. And we have been in an environment where this has been the screw job that we've been getting, right? These lower wicks and then right back. So as of right now, this looks like I'm just going to pass at this point. Now, if it looks like it breaks back above this area right here, the high of the day, then definitely a pass. Adobe, on the other hand, way weaker, putting pressure on the lows, actually. So this one now maybe makes sense. If it breaks into those lows, could be interesting. Bigger picture chart on Adobe does look like that is pretty weak. Pretty weak. Just don't like this little lick right here. It's a little concerning. And the volume profile is a little bit less interesting because you have this little node right here. So it doesn't has maybe more potential for a bounce, you know what I mean, a screw bounce, than if it was like breaking down right underneath here and into this area, into this zone right here. So that's why I would probably just leave that one now that I'm thinking about it. Just going to leave it alone. And Apple, by the way, just snapping right back to high of the day. So look at that. Further reinforcing the idea of like, well, there's a reason why I haven't shorted in a while. And further reinforcing like shorts are not super easy, clean money right now. They are not. But doesn't mean the S&P isn't going down. S&P is generally going down. Like SPY is weak. Here's SPY's chart. It's weak. QQQ, it's bouncing a little bit with Apple and stuff, but it's still weak. The Dow, weak. The Russell, still weak. So let's jump over to those risk-on stocks. Rivian, we were looking at before, right? This one is now breaking down below a pretty big level. We were talking about like last week, I think. Before that, it's looking like it's breaking down. You had Roku, hasn't gone off. The alert hasn't gone off yet, so that's not really tradable right now. But yeah, so it's still good. There's more action today. I like it, but it's not, you know, when you start thinking about like quality, it's not really there so far. Gold and silver are still crushing it, so up. Oil, gold, and silver are doing so good right now. Gold's up 0.62, which is pushing a new high, new all-time high. Silver looks very, very good. Like it looked like it wants to break out of its, past years, range, which would put us, if silver breaks that, you're looking at, let's just draw this in here. You're looking at something like breaking out here, a push into the upper 20s, I think would be very, very realistic, like up into this area. And then you're going to be dealing with resistance from these levels back in 2020 that you'd have next. So, yeah, I still hold a position in SLV, silver ETF, my portfolio. I haven't sold that yet, but if we get up into there, I definitely will be selling that. Oh, yeah. Okay, well, Apple bounced, so that's a no-go. Made it easy. Got a little excited there for a second that maybe we had something, but nope. Other than that, let's see. How is everything else doing? Tesla's bouncing a little bit. AMD's weak. We can jump over to AMD. I don't think I would trade that because the daily chart doesn't look good. It's not bad. It's actually not bad, but again, like you still have to kind of deal with. You're still kind of dealing with this zone right here, and I don't want to mess with that. I really don't. I'm not going to short AMD until it's below that zone, which would mean it has to break down under 165 at least, and it's $10 higher right now. So it's like, I'm not going to do that because my high probabilities are going to be here. My high probabilities are not going to be in here, so I'm not going to trade that. Could it work? Yeah, but doesn't mean that I'm going to do it. Tesla bouncing, so it's just screw zone, baby. The screw zone comes back to bite you. Now, the thing with Apple, if this thing, let's say, pushes up, can't break a new high of the day, which it didn't, and then pulls back down, do you trade it? Do you take it? Maybe. Check how the S&P looks. Maybe, but honestly, dude, with this, like when this is going on, it just gets me a little uneasy. It's like, well, I don't want to deal with that shit. I'd rather play momentum, not chop, and that continues to point to chop when you get those moves, big lower wicks. So, anything else that looks interesting? Let's take a look at some other ETFs. TOT. This is actually this is where I would be. So 10-year breaking out, like here we go, right? This would be, an idea of like, okay, what do you do here in this situation? Well, it would be a TLT short. Now, here's the problem. Let's see. Is there a problem with it? Let's see. So obviously breaking down, you would have had to ideally gotten in overnight, which would have been better earlier today, to get a better entry point. But is that a good trade? I don't think it's a bad idea. I mean, you zoom out, right, on the bigger time frames, and we are in a massive downtrend on TLT, right? So you have a massive trend to the downside on TLT. You're breaking this level. Not opposed to that. It's not bad, but only problem is there's a massive gap down. So like if we refill that gap back up a little bit, and it could be a little choppy, but this does look like this is a zone. This could be pushing through. And then you pair that up with a 10-year, which not the same thing. They're not the exact inverse, but it's generally 10-year goes up. TLT is generally going to go down to slightly different degrees. But, this is breaking out. So, when you try to fight that with your mind sometimes, and it's like, this makes sense, but I wouldn't personally, I'm not the one to try to play that game right now of like, yes, it's breaking out. If I would have gotten a little bit earlier, it would be a little more interesting. It's kind of breaking. It's made a nice move off the break already. 0.05%, which is nothing crazy, but it's decent in the grand scheme of the whole thing. This has kind of been playing that game of, so would we be surprised if we see this? Like this also wouldn't surprise me, right? So, and is that a high momentum environment to be playing in? Not really. That's just a chop. That's just a trending environment, yes, but not a high momentum environment. If you're a dip buyer, it's the environment. The environment definitely is catering right now towards dip buyers. That is for sure. We're not getting it super juicy towards momentum, but those things flop eventually. Let's see, retail. How's Adobe? Yeah, it still looks weak. Adobe's still weak. This is not like, yeah, it does look interesting. If I jump into a 1 hour time frame, you broke down that level. Yeah, I could see that panning out nicely. Volume though, let's check volume on that. 15-minute volume. Let's see. Yeah, first 15 minutes today, you put in volume here. And that's more than the first 15 minutes yesterday, the day before that, a little bit. Not more than the March 25th. But that's a good sign. You have decent volume on Adobe. But, volume, though, generally speaking, has been trending down on it inside of this consolidation, which is good because you kind of want that, right? You want volume to trend down while it consolidates and then pick up once it breaks out of the consolidation for the momentum, right? That's what you want to see in a perfect world. So I see it again, like I said before, right? The problem is under like there's just under 470 is a lot nicer for downside. Now maybe we get there and maybe you get a major entry right here. So it's not a bad idea. Just gonna watch that closely and watch volume. I don't think if that was something that I wanted to trade, like I don't think that needs to be decided right now either. That's something that can be decided later today, I think, because you've got, my way of viewing this would be, even if it drops down to under 490 on the day and you get in there, well, my stop loss is going to be over today's high, so it's pretty much like 498 is the stop loss. So you're going to risk $8, and then the reality is that I'm looking for a move underneath into here, somewhere in this box. So that risk reward is going to be juicy as hell. So even if you got in somewhere in here and you stopped over today's high, pretty much, you put your targets even towards like the higher end of this box, you're still looking at over a 2-to-1 risk reward. So I still think for a swing trade, that's actually still valid, very valid, to be taken even later. So I might give that one a little bit more time to see how the day sets up. But as you see, my eyes are not looking for, I'm not looking for the 5. I'm not looking for small shit. I don't want that. I don't really care for that stuff. I'm looking for where the bigger moves could be. And so I see a bigger move potential on Adobe for sure underneath the 475. But right now we're still, decently above that 475. So it's a little sketch. Especially with how the market's been, this kind of screw zone, chop, up, down. By the way, Apple just made a new high. Well, it's not. It's close. It's right near high of the day. So. Now, I wouldn't trade that, but this is a good example of a situation that I would be looking at if I was to try to go long. Now, Apple is not the perfect condition because it's been trending. Well, actually, it's been trending down as of late. But if it had been more so a trending up stock and you had a more of a cleaner series of higher lows, right? And Apple pushed up and then it pulled back and then it started to do like this, right? Consolidate. And then it it broke the consolidation by a little bit, but then it had a big lower wick and closed right back above the breakdown level. In a bigger picture uptrend, that is actually where I would say I would go long there, stop under the low there, and then look for a target of 1.5, 2-to-1 plus risk reward, depending upon the charts. But that would be the scenario of that. This is just not this doesn't meet the criteria for me to do that because we've been trending down, so you've got momentum to the downside. So yes, obviously, while it's bouncing, it doesn't mean needs to be like, still would not be a high priority upside play. Yes, it could be a bouncer off support. I see it, but the trend has been down. So my concern would be like, it bounces up a little bit and then it makes a lower high and then it does this could be what you deal with as well. There's a higher chance of that happening based on what we've been seeing. That's really what it is. So. Hopefully the stream is good because I'm seeing it says good connection right now, so hopefully we're good. But had some problems yesterday, and my plan is today to take a look into that deeper to see if I can adjust some settings to compare some prior streams from months back to now to see how it looks. But I'm seeing green lights, I'm seeing good connection, so for all I can tell, it looks good. Yeah, Rivian, same thing on that idea too, right? Weak, yes. Volume not super high, but it's done this before where it's broken under a level and then it's bounced back up. But then what it does is it just falls back into a lower high. So it may ultimately end up going for the downside here, but just the way it gets there may not be clean with momentum. It may be choppy. So that's my concern about stuff like Apple too, with the environment we've been seeing. Has not been super amazing for momentum. There's oil's chart. So looking good. I mean, this is starting to look good. But like I said yesterday, I think, I want to still see it. It needs to prove it to me more, and I'm not going to take any bait right off that. So I want to see maybe something like this would be now. Okay, here we go. But we're not really getting that either, so we shall see. And also a big thing to watch too is the 10-year. I'm like we've been saying, the 10-year, yeah. But does this move sustain itself? How strong is it and all that? Like, that will probably be pretty important as we go forward, my suspicion. So I would like to see the 10-y either holding up, or, I mean, if it rolls back over, then the market probably does well. The dollar is down a little bit today. Not a lot at all, but just down a little bit. That's certainly helping gold and silver. That's the thing. The dollar, we were talking about yesterday, has been relatively strong, but gold and silver have been, like gold specifically, has been very, very strong despite the dollar. So on a day where things are weak, right, gold and silver don't do necessarily what the S&P does or what the inverse of that does. They can kind of do their own thing to a degree. But sometimes on days where a lot of stuff's down, you'll see everything kind of down. You're not seeing that on gold and silver. You're seeing strength, and then maybe that you look over the dollar saying it's weak. If the dollar does, like, roll over a bit or just kind of fall back to the bottom of its range, that we've been seeing, or like to the lower end of the range, I mean, gold and silver look pretty good. Maybe that gets the silver breakout we've been looking for. But yeah, those guys look pretty good if that's what ends up happening. So yeah, I mean, this is better action, I think, than we've been getting, but nothing insane. The only trade that I would say, let's see. Yeah, I can trade Adobe. The only trade that I would say I would be looking at is Adobe. Chances are I would on the short side, but chances are I will be waiting for the day to progress a bit further to take a stab at that, although there's risks to that as well. Let's see. I'm gonna watch volume here. Let's see how the daily chart volume, how the daily is already stacking up, or I guess I can go to hourly, but I'll just go to daily so far, so we can see a little bit of that. You're at 400,000. Yesterday traded about a little bit over 2 million. You had the day before that 4. So if we trade like 5 million shares today on Adobe, if we trade 5 million shares today on Adobe, and it closes below 490, that would be a really nice look. So I think that's kind of my threshold. 490, like, we got to be below 490, and we got to be on pace. We're looking like we're going to trade 5 million plus shares. If that's going to happen, then I think that's it meets my criteria, for the most part. Not that this is like criteria, but when I zoom out on these things and I look at them and I say, like, where's volume profile? This is not necessarily criteria, but this is kind of just more of like the subjective nature of, like, do I want to trade this or not? It's like, well, this, could be a bounce zone. So it could be a screw job, or this could be, if we end up staying weak and breaking down, you could be getting in. The setup right now is presenting itself a little bit early, which is good. And then you get into here and you might have a really nice downside move, which would be awesome, right? And make this like a 3-to-1, 4-to-1 risk reward type of trade if you get into that zone, which is nuts. So the potential risk reward is really good if we meet the criteria. Now, see, other side of that is, I'm not going to do that if the S&P bounces back up here today. If we finish and the S&P is climbing all day, and I'm not doing that. There's no way. So that's the thing. It's going to be one of those, like, is it going to be a follow through? And I think we'll have more clarity on that by the end of the day. So far, I don't love the looks. If you are hoping and, like, cheering for the downside, I don't really love what I'm seeing. I'm not seeing complete, dumpage across the board, and some things are actually up. For example, Meta's actually up. ExxonMobil's up 2%. This thing has been an absolute monster. This, I thought a few months back, was finally like, okay, giving up its reign and its control. It was showing some good weakness, but it's right back in action, and freaking oil is killing it right now. So no wonder Exxon is approaching an all-time high. Let's see if I draw a level here. Well, not perfect, but this is a rough area. You got one touch here, a two touch here. You breach it by a little bit here, but we're pretty much touching it again. So that's like your fourth area of resistance. Now, I think I like the XLE chart better than ExxonMobil, but I also, like I said, skeptical on this. So not bad. Volume's there, everything's there, but I might just let this one go on its own. The problem is because because I look at this chart and like you have to go huge time frame. Like it's really breaking out on the monthly. So that means that you get an XLE right now, and as long as we stay above the breakout point, like 93, 94, you're planning to be in here for months, potentially. Months with an S. Based off the time frame that it broke. Now, if it breaks out and goes to 100, 102, 105, I mean, that's awesome. I'd be getting out of that. That's exactly what I'd look for in the trade. But that may just take time to do that. It may do, and then eventually go. But we'll see. The time frames are a little large. I'm not going to trade like a massive breakout like this, right? With a short-term time horizon. My time horizon would be big, very, very big on that, because you have to zoom out even further to meet or to get the charts to align at least decently, I think. XBI breaking down, not surprising. Rivian bouncing, so yeah, a lot that I'm seeing so far. We look at Rivian, we look at Apple on the two short side play or ideas, and those two ideas, we broke the level and then we bounce right back off that. It rubs me the wrong way. I don't like that. So probably avoid. Gold new highs, gold to beast. Jeez, look at that thing go. New all-time highs on gold. Killer. Silver's up nearly 2% now. That's your little downtrend break on silver. Above 26 gets me really excited on it, but it's close. It's about 50 cents away for that. But other than that, we're just chilling. Yeah, SPY's coming back down a little bit. But when the SPY comes back down, you'd want to see everything else do the same. So is Adobe. Adobe's not really come back down. But I like to care about the 5 minute too much, but just to see a little bit closer. It's not that far off from the lows, but it made a low. Massive wick. Well, not massive. A decently sized wick, and then screwed. S&P's down just under 1% on the day, which is the first like decent red day I feel like in a while. Maybe I'm wrong, but this feels like a bigger red day than we've had recently. Let's jump over to the charts. Yeah, I mean this is not that large of a gap in the grand scheme if you were to go back a few months, but based off what we've been seeing, yeah, it's a decent move. Now, we've had gaps. We've had some small gaps. Here's one. Some gaps in there, but nothing crazy. This is a decent one. But from 518 up to 521, give or take a few cents there, that's the gap fill. So if you get above 518, then targets could be up towards the 521 area for it to fill the gap. So We'll see. But SPY doesn't look super strong either. It just rejected around the VWAP area. Not that I really use VWAP that much. This white line is volume weighted average price. Came just north of it and then is pulling that back into it or back from it now. That's a decent. Yeah, there you go. There's some weakness there now. There you go. Apple, Microsoft's a little bit weaker, but the bigger picture chart on Microsoft was not that weak. So we looked at that a few minutes ago. It's like, eh. Tesla's kind of just chopping back up a bit. Looking across Meta, everything is just like kind of up off of its lows. So how about the Qs? Dow, Russell's weaker. Can you say that? Yeah, it's similar. It looks very similar to SPY. Quite similar to SPY, but you could make the argument that like, yeah, if we break down below here, you know, oh yeah, we get a little bit of a little breakdown. You know, it could be good. We'll watch that one though. The truth is out there. It sure is. AISP. Let's see. Airship AI Holdings. Decent downtrend as of late, right? It needs to get above 825 would be a really good for it. But I liked how, you know, you like this little pull. There's not much history here, obviously, to go off of. No, that's the only problem. But this little dip and then bounce does look good. Now you just don't want to see it give that all back. If it does, that's not the great. Then if it does, then you know you're weak. This is like a key spot. Pre-market today, key spot. Because you kind of have almost this look of if this kind of can't go, right? This is going to be a head and shoulders setting up. So you want to see this area hold, ideally, which is around 625. New low of the day on SPY there. Look at that. There you go. The Russell, yeah, it's not a new low of the day, so it's not as weak, at least in the moment. SPY Qs, not quite. So SPY is weakest right now. But Apple's not at lows. We were looking at Adobe before. That's getting there, but not at lows. No, yeah, it needs to go under 491.50. So it's about $1 off the lows. For a $500 stock, it's, you know, can do that in 2 seconds, but there's a little bit of, there's your weakness on SPY. So you're getting some there. Daily on SPY, let's see if we can jump in here and check and see what this looks like. Trending up, man. Just trending up. But this actually is, it's tough. It's not perfect because you can draw this in however you like. You can make this however you want to see it. If you go from here to there, yeah, you kind of have, this is more like if you go from the lows of January 24th. Sorry, January 31st. Starting to break down. So that does look like a promising setup. If we close like under this 516, 517 area, like that would be good. Weekly for AISP. I don't know, dude. I don't know what's going on with this thing. I don't really trade small. What is the market cap? 169 million. It's pretty. That's a small cap. I used to trade stocks like this, but I'd be buying them in this area. Obviously, a lot of them would just, you know, go to the lows and never come back. But some would spike, and you get the massive spikes, and that would be it. The problem is, like, once you play, like, once these things spike, you're in this, like, at least I experienced for a long time, like, you lose your edge from a long perspective, and then it becomes a guessing game, and it becomes a, no, trust me, it's gonna go up. It's this, it's that, it's this, it's that, it's the shorts, it's this, it's blah blah, and then like you're hoping and praying, and then you're not looking at the charts and stuff. So that's why I just don't really care for stuff like this personally, because I have more history on bigger name stocks, bigger charts that have much more data to go off of, and then we have key levels and stuff. This is not like, you can still use a lot of technicals and stuff, and I don't care for fundamentals. Like that's something for somebody else. It's not me. I don't care. Not that it isn't good. It is definitely a way people can trade and or invest. Or say invest. I wouldn't say trade. It's a way to invest, not a way to trade necessarily. Because you can go ahead and try to understand fundamentals and then try to trade off of that, because price can do whatever price wants to do based off of whatever's going on. It can do whatever it wants. It may be completely against fundamentals. And the same thing with, like, you look at NVIDIA for so long. Oh, NVIDIA is overvalued, and it kept going higher, higher, higher. So that's why I like technicals, and I don't care about fundamentals. And when it comes to investing, I just buy ETFs, so I don't have to worry about individual stocks. But that's just me. But yeah, the idea for me though, like if this was a small cap, right? Or I assume, right? Yeah, like your range is big in here. So you could be, if you buy at the wrong time, when there's no way to know, you could be down 20, 30, 40% sometimes, but you're playing for these 50, 100, multiple 100% spikes, which obviously you saw, right? This thing went from not going to cherry pick lows from somewhere over the middle of the range. The thing from low to high went 700%. That's awesome. Problem is, at some point that starts to fade, and then if you start buying up too high, anyone who bought this thing in the hype, bought this thing too high, now all of a sudden starts to get a little pressure, and then it starts to weaken. If it continues to weaken, now a lot of people are underwater. You run the risk of offerings and whatnot. I don't know anything about the company, so I'm not, who knows. Now, if it starts to weaken, and then now you're sitting at a point where like, oh shit, everybody who bought this thing after, March 5th is underwater. Where's the pain trade? The pain trade is now being long, and that's where the shorts can eat. The shorts get screwed when, you're shorting this thing down in here, and then it blasts, or you try to short this thing on the first day or first 2 days of a run, then you can get destroyed. But eventually, as that starts to fade and we start to see the thing, once it fades back, you just don't want to be caught up in, I'm now on the pain trade and I'm not thinking rationally because of that. I'm thinking, I just don't want to get caught up in that. Because I've been there, I've lost a lot of money doing that, and it's just not fun. It's not worth it, and just a waste of time. But doesn't mean that it can't bounce. Just don't want to see it dropping below 625. So it's a lot of range. It's a volatile name for sure. Silver's up 2%. Gold's almost up 1%. Bitcoin trying to come back a little bit. Yeah, came down to under 65K. It's bounced, but nothing crazy. With that move, let's see what Adobe did. Did Adobe push lower? It tried to. Yeah, I don't know. I mean, we'll see. Give it, if it stays under VWAP all day, that's obviously going to be weak. The only trade that I would be looking at right now is Adobe. Very, very low chance of Apple, but Apple, if the market stays weak, yes. I would say Adobe looking like a swing trade short potential opportunity if it gets under 491, 490 by end of day with high volume, which it's on decent pace for volume, but it's not like anything super, super special or crazy. That's the only thing that I have to say about it. Yeah, first 30-minute candle, not bad. The second 30-minute candle still got 12 minutes to go. So far, first 30 minutes of the day, decent volume. Not as high as what we saw back on Wednesday, but higher than, not higher as Monday. I don't like it. I don't like it. I want to see more volume. So far today, you've seen 637,000. I want to see 5 million plus volume on that, or else it's not worth it by the end of the day. Now, of course, you're gonna have to wait till the end of the day. But if you're on a pretty good pace and you're at 4 million in volume by 1 p.m. Eastern, okay, that's pretty darn good. Look, okay, we're probably gonna hit that today. But if we don't get that yet, not gonna be great. CGC on rebound. Let's see. I haven't looked at CGC in so long. Canopy Growth. This is a stock I remember many, many, many months back. Just zoom out on this bad boy. Many moons ago. But that took a dive. Cannabis is doing pretty good as of late. These stocks have been holding up, and they don't tend, history the past couple of months, or 2-3 years, right, has been pretty negative for a lot of these guys. But higher lows, man, higher lows. So took a little dive there. Okay, cool. Now made a new high. Made a higher low. Looks good for now. Yeah, we want to see it holding like this 720 area right in here. Wouldn't want to see it falling below that. If it can fall, if it stays above that, that's a great sign. Now, the problem with these cannabis stocks, though, that we have to understand too. They're down a lot. Great, could offer upside. The history that they have had has been get destroyed for so long, consolidate, eventually spike, get destroyed for a long time, eventually spike, get destroyed for a long time, go to new lows. So that's the problem. And so you just don't want to fight the downside if we fall back into that trend. But they are, I mean, they're primed for eventually having good runs. I just don't know if that's going to, we've been saying, we thought maybe back in here, oh, here we go. And then no, it didn't happen. Thought maybe back in here, no, and it just didn't happen. So that's the only thing about it. Moving to the American stock. Oh, okay, cool. MSOS is the U.S. cannabis. MSOS. MSOS is the U.S. cannabis ETF. This has also been super strong. Now we want to see this thing make a new high, which it's close. Want to see it above 1075 or 1065 right here. Yeah, I want to see it get above that on MSOS. These are all like U.S. cannabis companies inside of this ETF. A lot of these guys are OTC, so it's easier almost for most people just to buy the MSOS ETF if you want to get exposure to cannabis in the US or from US companies. This way you can get you don't have to go to the OTC markets and buy the individual companies, which you could if you want to do that, but this is what this ETF is all about, I guess. IWM weak. Let's see the 5-minute on that. Russell. Yeah, the thing is too, like that's what I'm thinking with that's what I was kind of hopeful that we would see at some point. And that would be like once that happens, I feel like, and what I mean by that is like risk on goes. So like the Russell, like what I'd want to see in a perfect world, like for me to feel complete, not that I have any necessarily waiting to this, but for me to feel like, okay, like the bull market kind of ran its course and now it's, perfectly fine to start rolling back over now, and who cares, whatever happens, would be like Bitcoin going crazy, you seeing mass euphoria in some of these meme coins. You've seen some, but nothing super, super crazy. Would want to see the Russell showing some really good strength, getting up to its highs, right? The Russell pushing up, getting up towards its highs, pushing in a new all-time high, seeing penny stocks doing well, seeing risk-on stocks doing well, seeing cannabis doing well. It's one of those sectors, right? Penny stocks, like seeing those things have their day, have their couple of weeks or couple of months of like fun. And then once that's occurring, and then your grandmother starts talking about this penny stock or this stock or that, and then it's like, okay, now we can probably roll over at any time here, and I would be fine with that. We just haven't had that piece. You've had the S&P, you've had the mega caps, you've had the big boys, tech and stuff just ripping higher. You've had a lot of good large cap stocks doing well and pushing up, but you just haven't had in this bull run. You have not seen risk on. You haven't seen growth. You haven't seen those companies like the smalls and stuff. You haven't seen them do it and go for it. And so that doesn't have to happen, but that's kind of like the last piece. Once that happens, like in my opinion, there's no reason, especially with what we've seen the past, couple of years and stuff, there's no reason you should be you should put yourself in a position to get absolutely destroyed. You should be proactively making money and locking gains in, and then making sure that the higher things go, the more euphoric things get, the more exciting things become, the less exposure you have, so that you can't get hurt once things eventually hit the fan. Who knows when and how long that could last, right? But that's kind of my view. We haven't had that yet. So that's where I kind of get a little like, I wonder if that's coming or not, right? So we'll see. With that said, I honestly do not see a reason to do anything right now. We were looking for the short side a little bit with Adobe, Apple, but those don't look good anymore because the market's bouncing a bit. And they're not following through to the downside with high volume. So you had Apple that looked like it was going to do it, then it had a lower wick. Adobe so far a little lower wick. It's not showing weakness, but if we roll back over by the end of the day, different story. But for right now, yeah, not really. The 10-year, by the way, check this out. As I'm speaking right now, I didn't even realize this. The 10-year just kind of is pulling back. So this would be something to be paying close attention to, in my opinion. If this 10-year spikes above this line, right, which it broke out, right? If it closes under this line, not a great look. And then if we start to break down in the coming days and accelerate, that's a false breakout. We may be headed the other way in a fast manner. Just, again, strength is there, higher lows. But if that happens, keep that in mind. And that wouldn't surprise me because that's how the market's been. It's been choppy. It's been, up and down, left and right. Like, it has not been clean. So that's a decent move down off the 10-year, and maybe that's off the back of some economic news. I don't know. We had some stuff coming out, factory orders, job opening stuff came out, whatever. Nothing that's massive in my opinion, but some Fed speakers coming up here soon. Actually, as we speak right now, we got one, right? Supposedly. Here's some of the news. I'll pull it up. Here's some of the news. So we had factory orders, actual 1.4 versus estimate of 1.0, so that came in a little bit high. JOLTS, U.S. JOLTS job openings for February, actual 8756K versus 8863K, so a little bit lower. Well, that was previously, and the estimate was, so there's more job openings than estimates. Durable goods came in at just below estimates, so 1.4 at 1.3. Yeah, I mean, that's nothing crazy, so. Yeah, nothing crazy. That's the news. So, with that said, I think I'm going to wrap things up for today. We'll be back tomorrow for Power Hour. We go Tuesday, Thursday, we try to go the open, and then on Monday, Wednesday, Friday, we go streams for Power Hour. There should be a trade recap coming later today on the Russell trade. And other than that, I will see you guys in the next one. Peace. Enjoy your Tuesday, and watch the 10-year. I'd say this something to watch. Watch the 10-year. If this thing unravels, that's decent news for growth, small caps, etc. Peace.